PSN, most traders read this chart wrong. One level decides it, trust or trap, not investment advice. PSN daily chart. It already swung up 16.6% inside this window, and most people are reading it wrong. So is this a move you can trust or a trap? One level decides it, and it is already on this chart. This window has a high and a low. One number between them matters more than both. PSN opened this window around 53.45. From there, it rallied up 16.6% to the high near 62.3. Then a pullback carved out the low near 36.26. And here is that number. It is holding 16% of that range, sellers still own the lower half. But charts do not move on their own. Look at what just happened here. This is not a random candle. Something changed underneath. It cleared its 60-day high, then handed the whole move back and lost its 60-day low on 2.1 times normal volume. That is a structural change. How unusual, put it next to the S&P. Same window, side by side. The S&P did up 2.2%. PSN did down 24.5%. That is a 26.7-point gap. Strength against the benchmark is information. Now the structure underneath. Zoom out first. The weekly decides whether any of this matters. On the weekly, the higher time frame is down. Zooming into the daily, the 6-month trend is down. Down on the 7-day chart, price keeps bouncing between the same floor and ceiling. So every time frame points the same way. The downtrend is aligned. Direction we have, now the levels that actually matter. Here is the catch. There is no clean impulse to retrace. This is a range, so Fibonacci would just be lines floating in the noise. The levels that actually matter are the edges of the range. Resistance on top, support underneath. A close beyond either one is the real trigger. We know where, but is there fuel, momentum? The RSI on the daily candles. It sits near 29, in oversold territory. Stretch to the downside, so watch for a relief bounce. The slope matters. Falling RSI confirms sellers. 50 is the line between up and down. One gauge can fool you, second opinion. That is where the MACD comes in. The histogram is negative, and it just crossed down. Fresh bearish momentum. Falling red bars mean momentum is bleeding out. When both agree, the signal is stronger. Every piece is on the table, so how does this actually play out? 3 ways this resolves. Bull case, it holds this base and grinds back up. The old highs are too far away to call a level. Base case, it chops inside the range while the market makes up its mind. Which one is it? Back to the question. So trust or trap? Over the past 3 months, PSN closed down 24.5%. Broken levels and fading momentum. That is the trap the chart was flagging all along. That is the read. Drop a coin for the next one. That is the week. A fresh board and a new name on top are coming. Subscribe so you do not miss which one.